Hello, everyone, and welcome back to Credible Perspectives. This is episode 8 of season 2, where we are still discussing all matters to do with taxation, policy matters, etc. And right now we're welcoming Mr. Mbiki Kamanjiri, a tax expert who has been in the environment for over 14 years. And he'll tell us more about what he's been doing and how he got here. So we'll just begin from there. How did you find yourself as a tax expert?
Well, the journey started straight out of campus. Some of the big four had come to school looking for graduate trainees. And I remember it's my roommate who'd initially gone for the career fairs, and he was like, Mbiki, I have found the place for you. So I didn't even know tax was a profession. I thought I'd just complete the legal studies, end up being a lawyer, running in and out of the courts. But yes, that's where we started from, through the graduate trainee system. I was placed in tax, so I have a background in law and accounting. And the feeling was that is a good marrying. At least from the legal background, you're able to read. Tax has a lot of law, so you're able to read. Then the accounting side gives you an understanding of the numbers. So when you marry those two, I think that's how you end up in tax consulting.
Okay. And so it's been more than 14 years, if I'm not wrong.
Just hitting 14 years, actually this month. Yeah.
Oh, congratulations. Go
Thank
you.
you.
How has the tax environment looked like, from manual filing to now embracing tech, and we hope AI? How has it looked like from where you sat?
It's been a huge and dramatic change. I remember when we started out, we used to fill the manual returns. And those used to have a lot of error in that. First, how you write your 8 sometimes looks like a 5. And so that goes to carry that way. And whoever is now transcribing to the system picks your 8 as a 5. And that becomes a whole dispute in terms of reconciling what you declared and what has been paid. And tech has really simplified this, because I remember we would first fill those manual returns on that big paper. First, even getting that big paper, not everyone had access to it. Then once, and you remember now, this is from a consultant's perspective.
Yes.
We have hundreds of clients. So we're filling hundreds of these many returns. And as soon as you're done, you run to carry and queue. Looking at your watch to ensure that you don't get caught out by the deadline. And now looking at it today, where you can comfortably do it from even your home, behind a laptop or a computer, fill in. I think there was that initial resistance to the change, but now in hindsight, it's really made the work much easier. Actually, we were discussing how, as a profession, we've lost quite a number of income streams because of how KRA has simplified the system. Pretty much, especially for people who just have a salary as an income, and you have your employer who's deducting PAYE monthly. Filing your return with employment income only is a matter of 5 minutes and you're done. That is if your employer did the correct deductions. It's not at the point where you're clicking submit, you're discovering you have payables and penalties. But other than that, the system has really, really changed. Tech has made it different. Even for us as the consultants, we've had to rethink how we do our work. And in a sense has also led us to shifting our focus to not just filing returns, but now how do we, before you even get to filing that return, we now have more time to focus on how can we serve you better? Mainly by helping you understand taxes and how you can plan your business around that. Yeah.
Before we came to studio, you mentioned something about how the digitization of e-teams, etc., has also forced companies and businesses fill some gaps that they had, where pilferage would happen, theft within the company. How did that happen?
It's, again, from the headache of e-teams, iTax. What I've seen, especially for what I'd call the pure entrepreneurs, pure businessmen, they focus primarily on the product. So let's produce, and sell.
Yeah.
You don't focus so much on what happens by the time you're getting to sell in terms of the numbers. What are your expenditure? And tech has evolved in a way in that now you have clear visibility of where your money is going, what you're spending. Before, there used to be this practice, especially with employees who had a scheme where they get reimbursed for what they spend out there. You just had to come up with a receipt and then come claim. And extended even to unscrupulous businessmen. There was some years back when KRA started the VA, the automated audits. Once that system went live, so many people got caught out. And part of those people who got caught out were actually also honest businessmen. And they started to realize that some of these expenses that we're paying for are not real. Tech now has enabled people to when you get an invoice, nowadays it has the QR code. You can scan it just to verify and see whether that is indeed a true invoice. And even with the complexity of generating, it safeguards the businessman in that you're sure for what you're paying for is real. And now that has resulted in many guys actually seeing, now we're not paying as much. We don't have as many expenses as we did. That's because probably the guys in your company who were stealing from you don't have as many. Kenyans still are forever coming up with new ways, but at least for that one, that hole has been plugged for very many, and especially for small businesses who might not necessarily have capacity and resources to employ someone to actually verify each and every expense that we're incurring. Is it indeed a true and real expense? We have a client whose accountant disappeared just before
tax season
when they were required to file their returns. And we were able to recreate his books from information that he had both on iTax and on e-teams. And now we are seeing how this is really helping business. Yes, there's the headache of complying with it, especially if you hadn't gotten yet to that level of having systems for how even before you talk about your sales, your expenditure, how is it being accounted for? But now this is simplified. Again, even for us as consultants, we are seeing this is business that we're losing. With time, there won't be need for your traditional accountants, bookkeepers, because the systems are actually doing it for you. And when I look at the future, what it holds, especially discussions around AI, there's huge possibilities with it. Currently, the kind of information KRA collects on taxpayers, there's no government institution. There's no, I think, let me extend it even to businesses. There's no person currently in Kenya who's operating at that level of efficiency. The only hiccup I think that is facing, especially KRA right now, is what to do with all this data. Some years back, there was a treaty that we signed as a country that paved way for what is called the Common Reporting Standards, in short, CRS. And basically, what this entails is for all banks operating within the country to collect information, what they call KYC, know your client customers.
Customer.
That information is collected in a standard format and then shared with KRA. And then KRA in turn shares this with all other countries who are signatories to this treaty. And the whole idea is once in a while, they'll just check through their systems. Maybe Mokami here has set up a holding entity in Mauritius. So she's operating business here, but money is being sent to Mauritius. So traditionally, KRA did not have visibility of that information.
Okay.
But now where we're heading, not just in Kenya, not just in the business that you're doing with the e-teams and that data, it's globally.
Yeah.
So as it stands, I don't think KRA yet has capacity to interrogate all this data that they have.
Okay.
But globally, there is talks of adopting AI to now interrogate this data automatically.
Okay.
And if you can look at even just, like I remember when iTax started, especially for us consultants, if someone had withheld tax on you, the 5%, come time when you're filing the return, the system would prompt you, there's information, there's income that you've not yet declared. And you'd be forced to go back, declare it, and then now, remember, there's only 5% that was withheld. With anticipation, come end of year, you'll now account for the other 25% if you didn't have expenses to knock off against it. So that has simplified even how KRA does its audits. So now you can imagine if you extrapolate this to data through CRS and now employing AI, what AI can do in a matter of minutes is more than what all KRA staff would be able to do even in 3 years. So I guess that's where we're heading. And probably this discussion of compliance, it won't be whether I want to or not. The computers
are doing it for us.
Are doing it for us. And I guess now businesses need to start having that conversation well before you get to that point. I think we're having this discussion. When you're starting a business, there's usually what you ask. My compliances, Kanjo, the licenses. Now tax needs to be a conversation that you're having hand in hand. Good thing is, before you start making money, KRA is not disturbing you. But when they see, and now remember, they're not waiting on you to declare. It's the systems who will be telling them, but there's someone who's just opened a business here. And it looks like
they're about to start making big money.
They're about to make big money. And if you hadn't factored in tax as a cost, we usually say KRA is a silent partner
in your business.
Okay. Yeah, they're not adding any value into the product that you're selling or the services that you're selling. But at the end, and in most cases, even before the end, they're waiting for their cut.
Yeah. You've said a lot, so I'm not even sure what to pick first, but I want us to go back to the conversation on incorporating a company, say, in Kenya and being taxed in Kenya, but also doing business in Mauritius, for instance. The example you had given earlier. That brings an element of double taxation.
Yes.
Let's talk about that.
So, double taxation is you have one income. So you're one person.
Yes.
You have one business, but this income is being taxed in two different jurisdictions. Okay, we call them jurisdictions in tax jargon because that's what demarcates one country to the other. Now, the example of Mauritius would be Mauritius has very good tax incentives. Their taxes are very low for international businesses.
Okay.
And for someone who has a business here in Kenya, here in Uganda, in Tanzania, in the East African community, it would be, and especially once the business grows big, you need to consider where do you have your holding company, because that transition, say for instance, your holding company is here in Kenya, you've made your profits in Uganda, they've been taxed there, and then they came in Kenya. In some scenarios, you'll find yourself also paying tax again
in Kenya.
Here in Kenya. So that's why Mauritius, Dubai, and they're not so far off from Kenya. You can a flight in less than an hour, maybe 4 hours. You're there and you're doing business. So that's why they seem to be lucrative. But we do not have a very good network of double taxation agreements. We only have, I think, about 14.
Okay.
And surprisingly, none with our East African community neighbors.
Interesting.
Yeah. So that means, say, me as a consultant, or maybe someone in the tech space, doing podcasts or consulting, you've gotten some business in Uganda.
Yeah.
Once that person pays you, they'll deduct tax. That tax, you can't claim it as a credit here in Kenya. And since you are resident here in Kenya, KRA is also expecting you to declare the same income, and then pay tax on it again. So double taxation agreements come in to alleviate that double taxation. And where in most cases they are negotiated country to country, like the 14 that we have, they've been negotiated country to country. And what that ideally means for some, let's have an understanding. This income, where is it going to be taxed? And if it's taxed here, the country where you're resident, either they won't tax it a second time, or if at all they do tax it, you'll be allowed as a credit. So for instance, in Mauritius, maybe you're paying tax there at 15%. If it comes to Kenya, where we pay tax at 30%, you'd only pay the top up 15.
Okay.
Yeah. So that's generally how double taxation agreements work.
Okay.
But sadly, here in Kenya with our immediate neighbors,
we don't have
one.
So is it to say that there are no agreements within East Africa or even globally that would allow people to avoid multiple taxation kind of
So
scenarios?
There's one that has been in the works for, I think, for as long as I've been a tax consultant. And what is our neighbors in Tanzania are the ones who are holding back.
Okay.
And sometimes I feel maybe it's because they also have the SADC agreement. So sometimes they feel they are more on that side. And the aggressiveness with Kenyans trying to protect, I think, their market. Because especially on the professional side, we have lots and lots of professionals here in Kenya.
Yeah.
So there's some sort of gatekeeping around it, but I'm seeing the negative side on it in that this is the most direct business that we have. And there's also that knowledge transfer. Yes, Kenyans will flock there, but there's also what they'll transfer there, which I think in the long run would be of benefit to them. Yeah.
Okay. Okay. Let's move a bit to cases. You're an advocate,
Yes.
the High Court, and have been in this practice for a while. What key cases do you think we should know about that have really impacted the tax environment?
There are quite many. Some of the ones that I really love are the trail of cases by Omtata fighting the Finance Bill, Finance Act. Those have really shaped tax administration from the point of even before a tax has been introduced by Parliament. Let's have a discussion first.
Yeah.
Let's see what's its impact predominantly on businessmen. And that's now has been the push for the public participation. This has, past 2 years, Finance Act 2023, that's, I think, when the general populace finally got into terms with this thing.
Yes.
Leading now to the 2024 one that was shut down. And people were asking, why do we have to do this?
Yeah.
And the understanding was, guys don't know about. So that case really brought tax administration to the limelight.
Yeah.
And the understanding that even these laws that Parliament passes, we're the ones who send them. And ideally, they should reflect business here in Kenya, in that, yes, at the end of the day, government wants to collect revenue, to do all these things that it's meant to do. But those laws should reflect business here in Kenya, in that they should be conducive, in as much as, yes, all these things are being introduced.
Yeah.
I mentioned KRA being the silent partner.
All our businesses.
Yes. Now let's bring them in that all these things that they're introducing, let them be efficient to drive business growth. Not that I'm having to employ a whole team.
Yeah.
I'm a manufacturer. I produce maybe shoes, but I'm having to have a whole team just handling taxes. So the round of those cases, in especially the submissions, what was brought out, what has come out in that, yes, you're a silent partner, but all these things that you're implementing and imposing should be seen to drive business efficiency. In that, as I am complying with the business, let it also help me do business better.
Let's talk about, you had mentioned before we broke off, you had mentioned the Finance Act for the past 2 years. There's the one that dropped as a result of Gen Z, and I want us to concentrate a bit on them, or rather the new innovations they've come up with, where I recently heard that there's a company somewhere that sells gas through cryptocurrency. So there's no more, I think, Bitcoin. Anyway, one of the virtual asset companies, groupings. And I want to hear from a consultant's point of view, is Kenya ready to tax cryptocurrency or virtual assets? Does it have the capacity, the parameters,
I don't think we're there yet, in that there's still a lot of understanding that needs to be done before we even start the discussion around taxing cryptocurrencies. Some years back, the CBK gave a communication to banks that hold off on this thing. We're not yet fully recognizing it as a currency, as a mode of transaction. So I think there are regulations which are still being worked on. So we need to get done with those first, and then fully accept it as a mode of transacting. Then I think even what now brought it into the conversation around tax was all these new crypto millionaires and Forex guys. And these guys realize, especially now that young guys aren't going into traditional. So if we don't start taxing this new thing that they're using, we're going to miss out on a whole revenue stream.
Yeah.
But how they initially, so 2 years back from 2023, there was the digital asset tax. And how it was initially introduced was a tax on, so for instance, you've traded in your cryptos and say you have 1,000 Bitcoin and that's been transferred to you. Carrie's view was tax, say, at 3% of what is being sent to you. And that's very wrong in that. Probably when I bought this 1,000 Bitcoin, they were retailing at, let's say, 100 bob per coin. But now that it's being, that I'm cashing out, it's a 70 bob. So meaning I've made 30,000 loss.
Yes.
But you still want to
tax
me. The general understanding of the gains from crypto, from Forex, these are capital gains. So the conversation we should be having around that should be similar to our traditional capital gains. And remember, even that had been put on a pause for 30 years, where the government saw that this is not yet mature. It's not yet a market that has properly matured. So let's give it some time. For property, it was 30 years. At least let people understand how to transact land, not just holding it as an asset. I think for most Kenyans who have land, has come by way of inheritance. So it's not yet a means of active investment and trading. So they decide, let's give it some time. Let the market mature. Let people understand how the transactions work. Then at that point, when you've seen, okay, this thing has picked up, we can start taxing. And then again, this being taxed, this being transacted online, and now with VPNs. I could be transacting here in Kenya, but my VPN is showing Uko in Estonia or some Serbia. So let it mature, let people get comfortable with it as a business that is accepted and understood to be, this is how we're doing business. Because if you start imposing such heavy taxes now, you'll be incentivizing these people to go the VPN route, that yes, I'm doing my biashara here in Kenya, but I'm looking like Amuko, Serbia or whichever country. So I think my opinion on this would be, give it time, understand, formalize it, and especially from CBK, let it be accepted as a formal currency, as a means of trading. Let it be similar to how M-Pesa took its time, but now it's almost impossible to do any business if you don't have an M-Pesa line. And that is probably where we're heading. And I think the problem with crypto, there was that huge crash by this company in the States that really did a lot of negative towards the trust. In that people were shocked that my money can disappear just like that. And such hiccups are what slows down the adoption of some of this technology. So if we'd give it time, at least let it get on it.
But how much time? The danger of time is that, and tech evolves very quickly. You sleep, you wake up, there's something new. So we might be saying, let's give it time for, is the time for acceptance, or is the time for evolution, I guess.
It's both for acceptance and evolution, because we still don't know what. Like, one of the brilliant solutions that blockchain has through the smart contracts, if that can be adopted, imagine it kills all the headache people have with land transactions. If our traditional title deeds can be done through blockchain, there's proper visibility for, you won't have these cases of guys being you have this property that you're going to buy, but now after you've released your money, you realize it's been sold to 3 other unknowing guys. That's the power that this tech has, but because people are scared of it, they don't understand it, we don't adopt it. So time here is give these young guys time to interact, use it, misuse it. Then we can see it's like a young tree that is still probably at the seedling stage. Yes, it's growing very fast, but you don't start heavy pruning. You want to start harvesting. Like I've seen nowadays, the grafted mango trees will start giving you fruit in 24 months. That's not the time to start heavily harvesting from it. So I think that's now what I'm trying to apply to what we have as tech. Give it time to see what is it capable of. Then, and once it's properly matured, together now with what is CBK is doing in terms of the regulations. So you have these people who are providing platforms to trade. Let them have the same KYC policies and obligations similar to the banks. Then that's the regulation that should be happening, not taxing. You're trying to tax something that you don't even know
I see
what
where
it can
you're coming
do.
from. Let's first figure it out, then tax it afterwards.
Let's tax it afterwards.
Okay, as we wrap up, what's one tax policy change you'd like to see in Kenya or East Africa or the world over?
Simplifying taxes. Kenya is surprisingly collecting a lot. KRA, like year on year, the revenue growth has been at least double digit, around 10%. Very few businesses in Kenya report or record that kind of growth. So in as much as, yes, they do have heavy targets and the budget is all ever increasing, slow it down for a bit, especially now that we're having a new and kind of exponential growth in terms of the kind of businesses that are possible within the country. Simplify the process such that for a person who is starting business today, figure out your business. Where are the thieves? Where are the cartels? Now, this silent partner, let him be facilitating the growth of that business by simplifying the processes. The tech that we have experienced, yes, has done a lot of good. But I think probably pause on what we have up to date and then focus, like what I'd mentioned, focus on tools for KRA to better interrogate the data that they currently have. And that pause will help guys get into business, struggle with product improvement. Then once it's good, probably maybe introduce a threshold for number of years for a startup before you have to now start complying with these heavy tax obligations. A good example that we usually give is during the COVID period, where the government reduced tax to 25% and 14% for VAT. Do you know that's the first year in very many years that KRA met its target?
Yeah.
And that's when ideally businesses were doing poorly.
Yes.
So expectation would have been that
collection would be equally as
yes,
low.
but that the tax was reduced, that it seemed, no, then it felt like KRA is actually facilitating compliance.
Yeah.
When there was that pause or slowdown in the aggressiveness for which they collect taxes with, more people complied.
Yeah.
And what we saw then is that the general populace of Kenyans, the general populace of Kenyan businesses, they're not what we think would be guys who don't want to pay taxes. Actually, you'll be surprised. Most of them are willing to pay tax. Just make it easy. I've paid. I don't have to keep coming back to review how much they. And sometimes the difference is very small. There was a discussion in terms we were having before where, yes, you found a non-compliant business person. Yes, the courts have agreed with you.
Yeah.
The tax that was being demanded was so huge that it's resulted into them closing business. In terms of what happened in the courts, was a win for you. But in terms of impact on business, is a huge loss.
And on people as well.
Yeah. The many employees who are working in that company now don't have jobs. Yeah. And that means KRA is also not collecting the PAYE. The products that they were selling, KRA was collecting VAT and other taxes on it. They're not collecting that.
Yeah.
So that aggressiveness, I think, is what had changed. Yes, they have done a bit in trying to change the image that they had, but probably the policy change that had effect is first simplifying. We don't need to have all these many taxes. And if at all they're there, can it be that, for me, it's one compliance point, that if I declare this revenue, let that sort out VAT, income tax, excise. I don't have now to file different taxes and different returns to collect all these various taxes. Let's have one compliance point, and you'll see many people adopting it.
Okay. Yeah. Okay. We hope to see that in the near future.
Yeah.
Thank you so much for honoring our invite and for being here with us today.
Thanks for having me.
Karibu sana. For this and more conversations similar to this, find us at the East Africa Tax Summit on 24th and 25th of September. Details shall be below.